Hey guys, Gino back again with another video, and today's video is how to buy stocks, what apps you need to use, and just how to be safe while doing so. So firstly, just a reminder, we are not financial advisors. This is for entertainment purposes only. These are our opinions, these are what we do, what we use, and you should definitely do your own research on this kind of thing. So I'm just going to start off with what apps we use. So the apps I'm going to be showing you today are Trading 212 and Coinbase, and I'm going to talk a little bit about Yahoo Finance as well, and I'm going to mention some other apps that you could download. I know 212 are having issues with getting members on at the moment, so I'm going to show you other apps, but they all use the same pretty much layout and stuff like that. So guys, the first thing I just want to differentiate is between traders and investors. So a trader is someone who tries to time the market. They're reading graphs, you'll see it, they're trying to read graphs, they're trying to time the bars going up and down, and this is where I need to get in, and it's messy, it's time consuming, it's hard to do. You can make good money, you're in and out, but it does make your capital gains tax a little bit messy. We're investors. If you're looking to learn how to trade and how to do quick this and quick that, you're probably in the wrong place. We're investors. We like to invest in things for a medium to long term. We like to find a company that we believe in, that we think has a massive future, and we like to buy in, and we like to cost average in. So cost averaging is what I'm going to recommend that you do. So for example, if you have €1,000, rather than just getting €1,000 and throwing it all into one thing, or taking 500 each and throwing it all into one thing, you'll get €100, put it into a company you like. Maybe the next day put another €100 into that company. If it goes down or up, it doesn't really matter too much in the short term, because you're looking at a long-term gain. You're looking far into the future with this, so you'll just get it at a better price more than likely, because often when you buy a stock, it will drop maybe 1 or 2% or 5% or whatever, and if you can keep buying in, keep having a little bit of money to keep just adding to it, it's probably the best way to go about it. So basically where we go from that is you're going to cost average in, and don't over diversify. So don't under diversify and don't over diversify. So don't have all your money in one place, and also don't have your money spread out. If you have €1,000, you shouldn't have 10 companies or 15 companies. You should have maybe 2 or 3 companies that you have your money in that you really like in the long term, and you can build that up over time, and you'll get there eventually to where you want to be. So guys, the last bit I want to mention as well is just how much money should you invest. So invest what you're willing to lose, because at the end of the day, there is a lot of risk that comes with investing. You can be as safe as you want, and if you don't have an appetite for risk, you could invest in an ETF, get the S&P 500. It gives you, on average, between 7 and 8% a year, and you can put your money in there, just get your gains, and you can figure it out, and you don't have to be picking stocks and buying stocks and checking it every day and all this kind of stuff. You shouldn't have to check it every day anyway, but if you're like me, you might get a little bit obsessed and you just want to know, you want to read, you want to figure out what's going on, you want to watch YouTube videos. That's okay too. So so you should have about 10 to 30% of your money available at all times, of your investment money available at all times, so you can buy in. So if there's loads of deals in the market, you might be around the 10%. You're after buying. The last couple of weeks, that's what's been going on. But if there's no deals in the market, everything's kind of high, you're kind of thinking, nothing really here, I want to put my money in, you should be around the 30%. But also, this money you shouldn't want to take out. You shouldn't want to be extracting it from your account, which is why I'm talking about long-term investments. This should be like, okay, someday I'm going to pay for my wedding with this, I'm going to travel the world with this, I'm going to buy my dream car with this someday, maybe. But you should always have money in a separate account. You should have your current account, you should have your savings account, you should have your never touch account, and then you should have your trading account. So your never touch account is for emergencies only, your savings account is whatever you want to save for, your current account is your day-to-day spending, and then your trading account is the last one, and this is the one that your money is working for you. I do personally, and I know it might be hard once you get into trading, you start to like it, it might be hard to keep the separate accounts, but you do need money that you have access to just in case of emergency, because you never know what happens, and it's important to be smart with your money. So guys, from there, we'll get straight into what apps we use. Now guys, so what I have here on my phone, which is going to be projected onto the screen, is I'm in Trading 212, which is our favorite app for investing. So we started off with this app and we've found it the best. We've used other apps, eToro, DeGiro, they're all pretty good. I have my parents set up on DeGiro because Trading 212 aren't taking people on at the moment, but it's all pretty much the same and they'll be able to use it the same. So if we take it to Trading 212, when you make your account, this is a paper account I'm in, so you can see switch to real money there. You can do this as well. This is a practice account. I put in €1,000 into this account just to show you what it's like to how you invest. Now it is the morning time here, so it's 11 o'clock, the markets don't open until 1:30, so I won't be able to actually buy a share in this video, but I'm going to show you exactly what you need to do to buy one, because you can't buy until the markets are open. You can't buy in the pre-market or the post-market, and I never do make an order before the market opens as well, just in case there's a dramatic rise or fall in the stock you're trying to buy. You can set buy limits, sell limits, worry about that in the future. If you're beginning now, just kind of keep it simple and don't overcomplicate it. So you'll be asked to make a CFD account or an investing account. Trading 212 investing account, you can see up in the top corner in orange, that is what you're looking to open up. A CFD account, you can borrow money, leverage money. I don't recommend ever borrowing money to invest. If it's in the future, you're done watching people on YouTube, you know what you're doing, do what you want. But for now, as a beginner, invest your own money. Don't borrow money from your parents, don't borrow money from your friends, don't borrow money from the bank, don't borrow money from a credit card, don't borrow money from an app. This is just invest what you have. Don't get greedy. Take your time with it and you will get there eventually. So you're opening an invest account, and one thing I'll definitely do in settings, go into trading preferences, a fractional share indicator. So turn that on. So you should have all these on. Fractional share indicator, that shows you what shares you can buy a fraction of. So for example, we'll just start off with a popular one, Tesla. If you want to buy a share in Tesla, you don't want to have, if you have €1,000, you don't want to spend $600 on one share in Tesla, because then over half your money is in one company, and that's not really the right way to do it. So what you can do here, you can buy a fraction of a share in Tesla. So let's just say you want to buy €250 worth of a share. So you go 250, you're getting half a share. Now don't forget, you're talking euros here, things in dollars, so I know that math mightn't add up 100%, but it makes sense. So you buy that share, you go review order, and then you can send buy order. So I can only send a buy order now purely because the market's not open, but this will just say buy share or buy stock or whatever it might say when the market's open. You can see there your commission's free. It tells you your share value, your number of shares, how much you're paying, and your FX fee, which is just for your dollar to US exchange. So you press send buy order, and then you have a buy order in there for $250 of Tesla shares. And people always say, oh, I'm not buying that, it's too expensive. Go back, watch Sam's video. That's not how they work. Just because it's $600 and another $6 doesn't mean it's more expensive. When you can buy fractions, if you get 10%, so let's just say you buy €250 of Tesla share, and you buy €250 of Tattoo Chef, which is $20 and $606. If you go up 10%, your 10% is still going to be the same. So your 10% of 250 is 25, and whether you have 30 shares in Tattoo Chef or half a share in Tesla, it's going to still look the same money back to you. So you're investing your money. Don't worry too much about the price of the share in that regard. Obviously it's very important in other sections, but when you're buying, don't not buy it because it's 600 and you only have 100. Makes sense. Perfect. So then you want to look in, and let's say you want to look up a stock. Let's say we spoke about a stock and you want to figure out, I heard them guys on YouTube talk about Tattoo Chef. What's Tattoo Chef? So you go TTCF or Tattoo Chef, whatever you want to type in, there you find it. TTCF is called a ticker symbol, so that's basically that's just a shortened down name for the stock that you can find it easily, and people will talk about it. You'll often hear people say TTCF for Tattoo Chef, or Coin for Coinbase, and there's loads of different ones. It's very, very easy to figure out. And then when you go into this, you can actually see quite a lot. So you can see company details here, Tattoo Chef. You can see exactly all the information about it. You can see how many employees they have. You can see their market cap. Again, I'm not going to go into PE ratios, market cap, revenue. Sam will talk about all that previously in the week. Financial summaries, you can see their income statements. And this isn't where I'd usually look at all this stuff, but you can see it there. I would usually look at this on Yahoo Finance, and it works the exact same. You make a Yahoo Finance account, you search the name of the company, and I will be showing you that in a minute anyway. So let's just say we have €1,000, so we're going to spend €1,000. So we have €250 spent on Tesla, and let's just say we'll buy some Tattoo Chef. So again, you're going buy, you go here, €250. You're getting 14.9 shares, but it's the same value as the Tesla because it's just €250. You review your order, and you can see again all your fees. You send your buy order. So now we have €500 spent. So we'll just pick two companies. Let's just say, so you have your electric car company, you have your plant-based company, and let's say you're into we can say you're into travel. So we can say you want to buy, let's say for Ireland, you want to buy Ryanair. You can go to Ryanair, you see it's 16 euros a share. You press buy, you go 250. So you can get 15 shares in Ryanair, 250, review order, send your buy order, and so we're 750 spent. And then one more, we'll just go into a dividend. So a dividend is a company that will pay you per quarter for holding their shares. You need quite a lot of money for that to be worth your while, but it's definitely worth looking into. So we'll just go to Wells Fargo, which is a bank over in America. Banks tend to pay out good dividends as well, especially the American ones. So you go buy 250. And we're probably going a little bit over, I'd say, because you can only spend a certain amount in your account, so we'll go 180 just for now. You do have to keep a certain amount of money in your account, and obviously there's a few charges and stuff like that with your exchange rate, so they make it pretty clear. They won't let you buy it if you don't have enough money. So you send your buy order, your Wells Fargo. Now you can see here then you can see there, so we have Ryanair, Tattooed Chef, Tesla, and Wells Fargo. And now none of these are investment advice, guys. This is just for the sake of the video. They're all timed there. You can see the timers beside them. They'll all go through at half 2. But if it's after half 2, they'll just come straight in as what you own. And then you can press in. You can see you have 250, CEO Michael O'Leary, employees over 17,000, and then you can go look into Ryanair. So then, guys, that's pretty straightforward. If I just want to show you Yahoo Finance then. So Yahoo Finance is what I'd use to look up different shares. So let's just say DraftKings, I was going to use as an example. You're in work. Tom in work is just like, hey, have you heard of DraftKings? And you're thinking, no, I watch UFC. I've seen DraftKings. They're one of their main sponsors. They're probably a good company. Online gambling. So you go up, you type in DraftKings. Also, we got an order execution there for Ryanair. Irish markets open at this time. Sorry, I didn't consider that. So DraftKings, so you can see it was up 7% yesterday. It's up 1% in the pre-market. But if you want to find out, again, Sam spoke about all this. If you want to find out a bit, you can go into their statistics. You can see their 52-week range. They've been at 27.5. They've gone up to 74.3. You can go into their details. You can see analysts think it's a buy. And they don't think it's a strong buy. I think it's a buy, just below buy. You can go into analysts. You can see exactly what they think. So you have loads of information in there, all at your fingertips. All you need is a phone, a brain, and a little bit of money to start doing this. So it's pretty straightforward. Guys, next I'm going to show you how to buy some cryptocurrency. I'm going to show you what apps we use. It's just going to be a very quick tutorial, and this is my own account, so I have all my numbers blocked off. We're going to do account reveals eventually, but I'm just not comfortable with it right now. So look, we go to you go into your Coinbase account. You can go into your portfolio, so you can see here, you'll be able to see exactly what coins you own. You can see your Ethereum, Cardano. I don't own all these coins, it puts everything in there, but you can see what you have. You can see how much you have in euros. You can see your daily, your weekly, your monthly, or your yearly charts, and you can see roughly how much you've done. And if you just want to buy something, we'll just go buy Ethereum. So you can see Ethereum's there. I'll tell you it's 2,000 euros a coin at the moment. It's up 13% today. You go trade, you can buy Ethereum, sell Ethereum, convert Ethereum, so you can convert your Ethereum into Bitcoin or into Cardano or whatever you like, or you can deposit or withdraw your Ethereum. I'm not going to press buy Ethereum because it's going to show you my card details, but if you just press it in, you can put in your card details or you can transfer money into that app. So guys, I hope that makes things clear. If you have any more questions, please message us on Instagram. We are more than happy to go through everything with you. Again, none of this is financial advice. This is all just our opinion, what we think and what we do. If we've missed anything, please let us know. We can go through it with you, or we can do another video if you need more information. So that's 212. You can also use DeGiro, you can use eToro. They'll all work pretty much the same. Coinbase, our safest one. It's probably one of the most expensive, but another one you can use is Crypto.com or Binance. I use Crypto.com for some coins that I might be able to get on Coinbase, which is I kind of like about Coinbase. They're specific on what coins they actually sell, and they don't have all this mad stuff that you see on the internet. And that's another thing, watch out for trends. Don't jump on a trend. If there's a hype around something like Dogecoin and everyone's like, geez, there's millionaires from Dogecoin, they've done it already. If you hop on now, you're probably going to get the brunt of it. And that's what happened to a lot of people. Happened to a lot of people with GameStop, happened with Dogecoin, Shiba Inu. People jumped on after it was too late. Don't try hopping on trends. Do it properly. If Timmy down the road made 500% yesterday and your stock only went up 5%, in the long term, 10 years, 5 years, come back to Timmy, check what he's up to, and I'm sure you'll see a big difference in your accounts then. So guys, thank you very, very much. Please hit the like button, subscribe. Really hope you enjoyed this video, and we'll talk to you soon.